Good morning, traders. It is Wednesday, the 24th of June, 2015. It's 8:02 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. As always, a quick rundown of the news overnight. Again, most everything's focused on Greece. Uh, the Greece it is possible for Greece to reach an agreement today with its creditors. There's a Eurogroup meeting, but plenty can go wrong. There's a receding Brexit fear, which is maintaining price risk appetite in the market. Overnight, there were mixed reports. Turn down my news feed here. Overnight, there were mixed reports surrounding Greece, which have accused which have caused the European markets to trade sideways or decline, as reports indicate. There are still divisions between Greece and its creditors. Dealers are noting speculation that Greek government set to reject the revised proposal from the creditors. So we still have this drama that's driven by news and politicians currently that's governing the trade, or a good part of it. German June IFO survey registers its second straight month-on-month decline. The Nikkei 225 settled at its highest level since 1996 this morning. And then yesterday, after the pit close, API inventories showed a third consecutive drawdown after the close, pushing crude prices higher. And then this morning at 7:30, we got U.S. Q1 final GDP annualized in line at negative 0.2%. Personal consumption at 2.1% versus 1.9%. And then final GDP price index is 0 versus negative 0.1, so slightly better. Core PCE Q on Q came in at 0.8 in line. Looking at what's ahead of us today, we're clear until, as far as economic releases, we're clear until 9:30 Central, an hour after the cash open for the DOE U.S. crude oil inventories, expecting negative 1.5 million. Cushing crude oil inventory looking at negative 700,000. U.S. gasoline inventories at 0. U.S. distillates at 500,000. U.S. refinery utilization at 0.40. It came out at negative 1.5% last time. And then following that, we have the, intermixed with that, we have ECB's Constancio speaking at 9 o'clock Central at the Debt Symposium in Frankfurt. European Chancellor Merkel and UK Prime Minister Cameron meet to discuss Europe and the issues ahead of them at 9:45 Central. At 10, Euro area finance ministers hold an emergency meeting in Brussels. This is the one we want to pay attention to. As far as auctions, we have a 1030 2-year FRN reopening for 13 billion, and we have a 5-year 35 billion note auction at noon today. So if you're in a curve or trading treasuries, you want to pay attention to that. That's what's on the news so far. Let's have a look at where we are technically. So those of you who attended the Trader Bite yesterday, the expectation was for the market to break lower. I was looking for a test. I was looking for the overnight low to be taken out. What it did was, let's see, the overnight session from yesterday. Here it is. So yesterday's overnight high was 21.2050. We pushed to 21.20 quarter. As indicated, I was looking for this low, the 21.14, to be broken, and for the market to test 21.13 quarter, and then push to 21.0975 for the naked point of control from back here. 21.0975, and it was not able to do that. It did follow Hypo 1 pretty well. We had a push up to 20 quarter early, but overall we got what we expected, a pretty choppy open, and then it rolled over and tested lower as expected. It held the low of the prior session at 21.11 quarter. So what we have here is a double bottom. This is an indication of a weak low, a potential weak low, and the expectation is for it to break lower. The configuration left behind on Monday was very clear that this low is likely to go, but yesterday it just was not able to do it. We ended up having an inside day in Monday's range, and we ended up not moving the point of control much. We ended up with a completely balanced day, and for this reason, we're going to throw up a profile, a composite for these 2 days to see what things look like if it climbs higher. So I'm going to bring that to the front. So the point of control for the 2 days combined is Monday's point of control. That's the one that wins out at 21.1475. I'm going to watch for that today. And then above there, 21.16. But overall, the way things are shaping up when you look at the overnight session, we pretty much went sideways as we often do on the Asian session. And then when Europe opened, it pushed higher, and then we got sellers stepping in to take this down to 21.08 quarter. So we're down in and through that 21.0975, but not in a day session. The profile overnight shows a pretty decent taper on the top side. An odd looking profile, mostly balanced. There's a clear consensus here at yesterday's low and Monday's low at 21.1150, with it testing the mid and failing from the mid for about 3 points, 3.5 points. But overall, it's not. It's saying that sellers are in control here, but it did not do a very good job of retesting this impulsive low. We still have an incomplete impulsive move down that occurred at 4:30 in the morning Chicago time. So despite what we see here, again, the theme from yesterday was the expectation that we would roll over and come down to 21.0975, test this pretty heavy area of support. We saw it tested on Monday. Again, we had a very weak high and a lot of volume in the 21.1150. We went to a quarter on Monday. We went to a quarter yesterday. The expectation is that it would likely break and have some energy behind it. The combined volume for these sessions and the fact that the point of control is so close nearby, the expectation is for it to have a little bit more energy to push lower. Below 21.0975, we're looking for 21.05 again to be tested. And that's probably as far as it's going to go unless there's some bad news out of Greece. So the primary hypothesis today, pretty choppy open. We have conflicting information for some. We do have news pending, and the expectation is it would be a pretty noisy open, probably an open auction in range with both sides active, not looking for any higher time frame or OTF action early. The expectation is responsive buying back into the 21.15 area, but the expectation is also for resistance to be found, and then for sellers to step in to take it back down to 21.08 for the overnight stat. That's the primary expectation. Secondary, we make a run for the low and push down into the overnight low area, 21.0975, and then we chop around and find a bid, find our buyers, and then get back in. If we get back above 21.11 quarter, your targets are 21.1475, 21.16, and 21.1750 for for the return back into this balance range. I still think the high is vulnerable. This 24.50 is very vulnerable. We are trading in the upper high volume node of this entire composite profile. Better picture of that is right here. So we've crossed through. This is the low volume node here at 21.1250. We've crossed through the low volume node into the next high volume area, and generally the market behavior is that we would continue higher as we start to form a weak high with the prior high that we have. I know that's a ton of information. I know it's probably confusing what I'm telling you, unless you've been watching this stuff a while, but there is a lot going on in this area. But essentially, the market moves from high volume node where it identifies acceptance to low volume to high volume to low volume to high volume to low volume. So the fact that we break through a low volume node creates a very significant chance at testing the high volume node, which we did 21.1650. Once we test that high volume node and we push through, which we did on Monday, then the expectation is it would go to the next highest low volume node, or where price created an extreme in the past, which is now the all-time high, and that's why we have that high probability of new highs pending. So that's how things are shaping up as of right now. I'm starting a new feature that I wanted to introduce. I know I get a lot of feedback when I get an email here and there and comment on trade experience, trader development issues, trader psychology, trader risk, all that stuff. And so I decided that it would be beneficial to those who want to listen to it to have a regular feature called the Trade Wisdom Wednesdays, and we'll do it every Wednesday after the market recap and the plan for the day. We'll discuss a topic, and today I prepared a topic for today. Today's topic is multitasking and focus. So there a lot of times in our development as persons, as professionals, there's value being put on multitasking. Multitasking has very rapidly diminishing returns. And what I see a lot of times with traders, and I struggled with this in the past with my own traders, is that folks will do a lot of preparation, do a lot of study, read other people's blogs, try to get ideas and so forth. What happens with a lot of people who are developing is that they put too high a value, in my opinion, on accumulating information. They're constantly seeking this magic bullet that is going to save them from having to go through the process of actually making the turn. And so what happens is they do a lot of homework and they do a lot of prep, and they have a breakthrough, and you have this euphoria where they feel like they've discovered something great, and then the next day the market plays out, and then they don't trade it properly, and then they essentially beat themselves over the head about the fact that they did all this homework and they just continuously fail. And with every failure, what they're doing is feeding a habitual cycle of more failures. And the question at hand here is, how do you break that cycle? I think the easiest and very first important step that has to be made is stop multitasking when you're trading. It is really important for you to set a specific time of the day, be it the open till an hour after the open or whatever, where this is your time. This is absolutely your time. This means that there is no Twitter, there's no news, CNBC, talking heads, there's no checking blogs, there's no chat room interaction, just for an hour. The focus during this period is on silence, which silence is where great things happen. I strongly believe that. It's been my experience. through meditation. The focus here is silence and execution. So, as I say here on the image you have in front of you, let me check to make sure it is in front of you. Yes. Set a key active time for you. Set a sacred time where it's just you and the market. This is a time when you don't need feedback from anybody but the market itself. Your only focus is the markets. It's not to open the door for the FedEx person. It's not to answer calls. It's not to pick up or drop off the kids. It is just you and the market. This is a very, very important time for you. This is like when an athlete goes to the gym and just on his own or her own just focuses on whatever it is they're looking to achieve, the incremental gain or the deliberate practice they're going to focus on for an hour or 2 hours, whatever that time is. You don't need the support of Twitter, me, chat rooms, or anybody else you're listening to during this time. You don't. You're on your own. You can do it. This is a sacred time when your only focus is to execute the plan you have in place and have worked hard to prepare for. The other focus is to monitor the market very closely without outside influence on your plan. As you listen to other people and as you allow influences in, you're gonna be questioning your plan and what you're doing and your trades. This is also a time to clearly document what was planned versus what you did and how it turned out. Very important. This is why I created the S5 Trade Analyzer, and we're creating other tools that handle that. This is a very important time for you where you cannot say, oh, I looked at this and I looked at someone's chart and I looked at Joe's chart or whatever, and he was short, I was long, or the guy I listened to, my guru, my mentor, my chat room, whatever, was long and I was short. No, this is a time for you to clearly have your plan in front of you, wait for the market to show you its hand, and for you to step in, execute your plan, document what happened, what you felt, why you did what you did, so that the afternoon, the prep time that you're going to get back to for the next day incorporates solutions, incremental gains, or focused and deliberate gains to address those things you have documented. I cannot overemphasize that you need to document whether you're scalping, swinging, day trading. It doesn't matter. Document it so you can address it. It gets on a list of things you need to work on that become your focus for the week, which is something I talked about last week. Identify a focus for the week, overcome it, conquer your fears, and then that way you can get past these things and see the market for what it is as opposed to something that is threatening and fearful all the time. Once this period ends, hey, it's 9:30 Central, it's 10:30 Central, how much ever time you think you need to actually execute your plan, resume your routine. Log into your Twitter, log into whatever you have, your chat room or whatever. Get back and get into that environment that gives you your comfort. But for the period when the market starts until you're done, and this could be something you do in the afternoon, whatever. This is your focus time, and all of your studies and a good part of your effort is focused during these hours. Anyway, I've gone way over my time. I just want to leave you with that thought and wisdom for this Wednesday, and we'll cover another topic next Wednesday. Hopefully this will help give you fuel to persevere and to pursue this passionately. It is my passion, and this is why I do everything that I do, and pushes you forward and gives you ideas on how to overcome little obstacles. This is a sort of thing that I always dealt with prop traders. A little push here, there, and everywhere can result in good consistency over time. There's no guarantee, and there's always risk to trading, but we all can use the help, all the help that we can get. Good luck to you, and I'll catch you tomorrow. Take care.